All right, let's answer some of your questions now. Jim, I'm coming to you first, okay? From Mike in Michigan, right in his backyard, wants to know about Ford. Buy, sell, hold.
It is a buy, but I would much rather have you in GM. First off, auto sales look like they're going to continue to outperform, albeit from low levels. But if you look at a 1, 2, or 5-year chart, you see that GM always beats Ford, and there's a reason for it. It's simply better run, and they've got a better autonomous vehicle and a better electric vehicle lineup.
Josh Brown, this is a really good question from John, Mr. Smiler on Twitter. Hi, Josh. Many have been saying that young Robinhood investors are getting carried away buying risky stocks. Aren't young investors with 30-plus year time horizons supposed to be taking risks?
Yeah, it's a good question. I see a lot of guys my age, like in their 40s, mocking kids who are experimenting and trying to teach themselves how to invest and trade. Don't listen to any of that discouragement. Take it from me. When I was in my 20s, I was doing ridiculous things during the dot-com bubble. This is how people learn. I think it's great. Just don't risk more than you can afford to lose, and understand the difference between speculation and investment. They are not the same thing. And I think over time you'll learn more and you'll be fine. I
mean, it's also a difference between buying, I don't want to say a ticker, but versus buying a company on the brink of bankruptcy. That's a little bit different of a speculative game that you're also alluding to.
We act like professionals can't do speculative, insane things.
Right,
we saw the Sequoia Fund have like 30% in Valiant at the top of the market, which turned out to have been a massive fraud. This was one of the smartest investors ever operating in that stock. So everyone can make mistakes. I think when you're young, the dollar amounts aren't that important. You're going to earn more over the course of your lifetime. The game has to teach you the game. And as Jesse Livermore said, it shouldn't spare the rod. So just take your wins, take your L's, learn the game. Don't listen to what other people say.
All right, good stuff, Josh. Thank you for that. Jenny, let's talk about Navient. David in Seattle wants to know whether you like that or Centurylink better. Do you like Navient better?
I like them both equally. In fact, we had a new account come on last week. It funded with all cash. We held off on that, and this morning put about half of it to work. Both of these names were amongst the companies that we invested in this morning for this account. So putting my money where my mouth is on those.
Anastasia, lastly to you, John in Long Island. What are your thoughts on emerging markets? I'm glad he asked the question because we haven't discussed this today, and frankly, we haven't discussed it recently.
That's right. And it's a very good question. I think there's two reasons why you want to be in emerging markets, either because you're a long-term investor or you're looking for a tactical trade. And what's interesting now, I think there's an opportunity for both. For long-term investors, a lot of those benchmarks in emerging markets are dominated by tech and consumer discretionary, we think are great opportunities that are driving earnings growth. And at the same time, those are the exact sectors within emerging markets that typically perform at this stage of the cycle where you've got low growth and you're starting slowly to recover. So I think there's a tactical opportunity, there's a secular opportunity. So emerging markets are down about 8% year to date. I want to be adding to those secular spaces.